I also believe that maybe a lot of business will move into India. So that will be a positive for India. It may be negative for, a lot of, you always say that US is, the hub of innovation.
The government actually had already done something in the budget when they gave certain concessions on the income tax front.
We're still looking at 8% of the entire retail business, which tends to be e-commerce.
10% on an air conditioner is very meaningful to be able to drive, consumption and buying and replacement cycles coming in.
Hello and welcome to Fortune India Boardroom, powered by IndiCube, our workspace partner. So today, I don't think it would be a surprise that we're going to discuss about the most discussed topic in the country, which is the GST cut. So I would like to start with the Economist in this panel. So Mr. Sabnavis, what do you think? What really is your opinion about the GST cuts? Are you going to see a significant consumption bump up?
So if you're looking at the GST cut, I think it was timed in such a manner that it came against the background of the tariff issue. So there was a lot of nervousness which was there in the country. Now, if you juxtapose this with the fact that when the first quarter results were announced by the major FMCG companies, they were lamenting that there was always a demand issue. Last year, I remember it was a case of saying that rural demand was not good. Now it is a case of saying that urban demand was not good. Now, why is that urban demand not good? I think one of the obvious reasons was that prices were too high. Inflation on a cumulative basis was very high. In fact, in the last 4-5 years, if you accumulate inflation of over 20%. So therefore, they felt that there was need for something to be done in terms of reviving consumption. So what did the government do? The government actually had already done something in the budget when they gave certain concessions on the income tax front. So on the commodity side, I think this was the opportune moment to lower the GST rates. In fact, the GST rationalization plan was in the works because it started in 2016, and maybe 9 years down the line, it was necessary to go in for certain further reforms. So I think this is what the government has done. And the rationalization was going closer towards what is normally there in countries where you have a single GST rate. So what they have done today is virtually reduce it to 2 rates. And I think this is something which has been very good for consumption because based on the numbers given out by the government, they said 48,000 crores would be the revenue loss. I don't look at it as a revenue loss. This is kind of gain in terms of income, disposable income for households, which we should remember could be spent to a very large extent on consumption goods, in which case it would be providing a boost to consumption. But this said, I think I would just like to qualify it by saying that we need to see as to who's receiving the benefits, because if you look at the income distribution pattern in the country, we have people in the higher, middle and lower income groups. People in the higher income groups were probably not constrained by prices. But I think, like for us on the panel, I think all of us were never deterred from spending because of higher prices. So maybe we may be saving it or investing the money, but definitely down the middle and the lower income groups, this would provide the right boost for consumption. So I think on the whole, it's very positive consumption.
You touched upon the tariffs, and there's also another disruption which has come up with the H-1B visa. So will all of that have a negative impact on consumption because supply chains are going to get disrupted?
So actually, if I speak as a macroeconomist, I say there is a kind of compensation which takes place in the sense that the kind of GDP which we could be losing on account of tariffs would be made up on account of the GST rationalization. Because we should remember that India is a domestic-oriented economy. When I say domestic-oriented economy, most of our growth comes because of the domestic population, domestic spending. So to that extent, I think it's been a kind of a compensation which is taking place. But this said, we should again say that when I'm talking of exports being affected, it's the MSME segment which gets affected directly. And they may not get full compensation, but definitely in terms of what happens in terms of the raw material costs coming down, I think the GST would be beneficial for them.
Interesting. I would come to you, Balbir, now. You had a luxury car business. And how do you think the luxury market would be impacted?
Well, first of all, thank you very much for having me. I think from the luxury point of view, though, I believe the impact of pricing is not very, let's say the impact of price reduction because of GST has a limited impact on the buying that happens in the luxury space. The elasticity is not that much. But it is only about the car pricing. But what is important for us is overall sentiment. Our industry, the luxury space moves a lot with the emotions and what is happening across the industry. We have various kind of buyers, and large part of our buyers are also business community. So when overall consumption grows, the profitability, the balance sheets of the companies grow, and that helps us, take the emotion side up, and eventually it leads to customers buying more cars. So I think all in all, we have to look at not just the reduction of the pricing of the cars, but the overall economy getting boost through this, and that definitely, I believe, will help us grow the industry as we move.
Alpana, coming to you, apart from Tiivra, you also are on boards of a lot of FMCG companies like Nestle, wherein in those categories where GST rates are either nil in a category like dairy, or in other categories which it has been slashed to 5%. So what really is your take? What do you see? Do you see prices really coming down, and consumption an uptick in consumption? Because from whatever I have heard is there's 70% of FMCG portfolio are in the between the 5 rupee and 10 rupee price points, and there's more likely to be a grammage enhancement rather than a price. What do you expect?
So I have a slightly different view from Madan and Balbir, because while the quantum of GST at a macro level is significant, I don't know if it translates into individual consumption across individual categories. So, for example, Nestle again, if there's a chocolate, say at 5 rupees, you're talking about 25 paisa that you're saving, or 10 rupees, you 50 paisa. Does it translate really into a price cut? Because these are often for companies price points, which they call the magic price points. It's easy to retail at that price point. I don't see them reducing the price by 50 paisa. That's one. Second is that FMCG companies have been beleaguered by rising costs over the last at least 10, 12 quarters. And in the last 4 to 6 quarters, it's been a significant increase in prices. And I feel that, they have been under so much margin pressure that this might well go towards them. But to your point, I think a grammage increase is possibly the better way for them, and that might be the way they might move forward. It might induce consumers to see more value in it and buy more. But the elasticity, economists permitting, of a 50 paisa on a 10 rupee product might not be enough for people to really see a spurt in consumption.
Okay. Yes.
Actually, I have the way I look at FMCG goods. When you lower the GST, let's assume at 10%, at least if you look at the newspaper advertisements, most companies are talking of a 10% reduction. I agree that if the price of chocolate comes down by 10% or toothpaste by 10%, I don't start buying more toothpaste. But however, if I have a overall consumption expenditure of say 10,000 rupees a month, and if I'm able to save 10%, maybe it comes down to 9,000 rupees is the value of it. This 1,000 rupees will give me the comfort that I could be spending it on other goods. So maybe I may not spend it on FMCG. I could possibly be investing in a mobile phone, or maybe I could be saving it, investing it. So while I agree very much that FMCG consumption per se may not increase, but we should also remember another thing, that of late, there's been a lot of competition with the so-called unorganized sector, the lesser-known brands, especially in the tier 2, tier 3 cities, which have actually gained because the multinationals were not able to lower the price. Maybe there could be some kind of swapping of consumption across these two segments, but that could be a different discussion. But I look at any kind of savings in terms of FMCG will definitely improve my disposable income, which could be spent or saved. So it's a positive again.
Angshuman, that is exactly the question I wanted to ask you, because we've had this discussion many times. So, in urban, if you go to tier 2, tier 3 India, you see a lot of regional brands kind of giving stiff competition to the national brands. And there, while the national brands were lamenting about volume degrowth, these brands never lamented about volume degrowth. They were innovating and they were giving a tough fight to the national brands. So, I mean, do you see now that, GST is going to be a leveler, everyone is going to be at 5%. So do you see the regional brands losing out now this time round?
Before I come to that question, maybe I just wanted to opine and add on some of the points that have been made. I think consumption is a lot to do with consumer confidence. If you just look at what we typically see, Nielsen Consumer Confidence Index, India amongst hundreds of countries has always been on the top for the last decade. So it's a little bit of feeling confident about the future, which is leading to that consumption. Like he mentioned that there's an emotional component to it as well. It's not that 2 rupees saved is pumped back into 2 rupees. I mean, while but technically that may be right, but the idea is that are you feeling unsafe about the future and therefore you're going into a shell in terms of savings, or are you feeling more positive and optimistic about the future and therefore in a mode to spend? I think that's a very important component, and what GST cuts have done is created a mood of positivity and positive consumer confidence about the future, and that augurs well. Now, how is it going to get channelized is a matter of whether within the same category or whether outside of those categories into discretionary. I think while the chocolate example is a great example, but things like air conditioners, where the industry has been lobbying for 28% coming down to 18%, because air conditioning is no longer a luxury as such, and the kind of heat waves we've seen in the last few years have been tremendous, and every household deserves to be able to afford. So the 10% on an air conditioner is very meaningful to be able to drive consumption and buying and replacement cycles coming in for some of those industries. The other point that I would say is that whenever we see inflationary pressure, we typically associate, or FMCG companies associate it with down trading, which means a 250 ml consumer buying maybe 100 ml, waiting and consuming it, then buying the next one. And I think that the uptrading is something that gets possible. Maybe the 5 rupee, 10 rupee again is a very small denomination, but maybe a 20 rupee product, somebody buying a 30 rupee product instead of the 20 rupee product becomes again a function of that consumer confidence. But taking a little more airtime from you, answering the question that you asked me, I think the leveling is between the informal sector and the formal sector, especially because between regional and national players, they both GST payers. So there was no disparity as such. It used to be more about, who's more competitive, who's got more, I would say, penetrative operating models to win in local micro catchments, whether it's, detergents or packaged snacks or any of these categories. But I think the formalization, the relative competitiveness of the formal sector versus the informal sector has definitely increased thanks to this. And therefore, there will be a tailwind in terms of the formal sector. Therefore, I wouldn't say marginalizing, but getting an edge over the informal sector across the board. As far as regional players and national players, like you're putting it, is concerned, I think both stand to benefit from this and are following the larger consumption. So I think that's the kind of drift that I would pursue.
Alpana, Angshuman just talked about consumers wanting to uptrade. So, I mean, he of course said like somebody who's using a 5 rupee pack would kind of want to upgrade to a 10 rupee pack or a higher grammage pack. Do you think it will also have a positive impact on the premiumization story, because there will be more money in the hands of the consumer?
So I think this whole premiumization in India, we are very value-driven people. And the idea of premium comes with how much more value are we able to give. So far, we've been, very cost conscious, and we've been looking at cheap. But value really means how much more are you getting. So I'm willing to pay more as long as the more I'm getting is more than the price I'm paying additionally. And I think to that end, yes, premiumization is something that we see across categories happening in the country. It from commodities to FMCG to even cars. Nobody is buying hatchbacks anymore. You straight away go to sedans. I believe there's no non-air conditioned car in the country. They straight away move to an air conditioned car. So this is what we call the jump grading, which is happening across. And that premiumization, I think, is a more cultural factor. It's to do with an aspiration for more. I don't know if this, the local global is changing that really. It is an overall trend that we see culturally.
It'll be interesting to get your take, Balbir. What do you see in the luxury car segment? Do you see the pool of luxury aspirants going up?
So what we've seen in last few years, let me take, let's say 5 to 7 years, or maybe a little longer. The luxury space has been changing drastically. The buyers, 10 years back, we could hardly see a woman buying a luxury car. Now 11% of our sales is women. On an average, 42% of our sales in the luxury space is people whose age is customers whose age is less than 40. 70% of our buyers are less than 50 years of the age. This was not before. The aspirations, like ma'am mentioning, that premiumization is definitely happening within our segment. The cars worth 1 crores and above, the growth is much stronger than at the bottom end of the pyramid. So we are seeing premiumization within the premium segment. Even that is happening. But with this GST cut, I believe we should be able to cater to a larger section of customers, because the car prices will come down, or they have come down between 5.5% to 6.7%. So we should be able to cater to a larger segment of customers. And I think we have to also see a little longer term, because what is happening is that we still are an economy where we still have less than 30 cars for every 1,000 people. So there is a lot of motorization which is yet to happen. Our urbanization is 35%. In next 10 years, probably it will become 50%. So a lot of people are moving to cities, and cities will develop. So we do see, from an automotive point of view, while we are the third largest market, we'll continue to go in the decades to come. So our growth is ahead of us, not behind us. So in general, I think all these efforts by the government, not only to reduce the GST, but also simplification. So we have to see also from that point of view, that the easier you make the economy, the easier it is to do a business in an economy, the more confident you become in spending. And that is what we are seeing with the younger customers. They no longer are only sitting at the back of the car, they're driving the cars by themselves. So I think the younger generation will be the driver of this economy, and that is what is positive for us, and we are quite gung-ho about it.
Before I move to the other consumption-related questions, I would just want to get some clarity on the input tax credit, because there's a lot of confusion around that. So, Mr. Sabnavis, if you can take that.
Presently, what happened before the reforms came through, there was this concept of input tax credit. So essentially what it meant was that if I was spending certain things on my inputs and there was a GST being paid, there would be a GST paid on the final product, and I could do an offsetting of the two things. Now, today the problem is that the moment a product has gone into a zero tax, okay, I was paying 5%, 12%, whatever it was. Now, if it comes to zero, like a very good example is insurance, health insurance, where you don't pay any GST. But as far as the insurance company is concerned, they have been paying their what do you call them, their agents, and there's been a GST paid by them. Now, normally you would be offsetting the GST on the agents with the final GST which is being paid on the product. This kind of thing is not currently available. So I think this has been one of the petitions which has gone from the companies to the government, saying you need to take a relook at it, because in case it's not corrected for, then automatically there would be a tendency for the cost of insurance or the cost of any product which we are talking of to actually go up. So this is something which is a kind of an anomaly which is there, but which I'm quite sure the government would be able to address. But if I would like to comment on this luxury issue, so I think the fundamental thing which is going to drive luxury spending in the country is the distribution of income. So there has been a phase where I think there is a big gap between the rich. The rich has, of course, gotten richer. So you have people entering that particular category who can go for vehicles which cost, say, 1 crore and above. But we will run into a problem of saturation at some point of time. So I think this is what we have seen in the last 20 years of our journey, that when you depend upon the rich to spend and keep the economy moving, it works to a certain point of time. How many BMWs, how many Audis are you likely to have? Like I stay in a place like Andheri, it's a suburb. And 5 years back, I'd never seen a Mercedes. When I saw a Mercedes on the road, I would say, look, there's a Mercedes out here. But now in my complex, I have a Mercedes, I have Audis, and everybody has 2 parking spaces, and the poor guy keeps his Audi in the open air because he has a bigger car which is there in the basement or in the covered parking. So I think we have seen this which has been driving the economy in the last couple of years. Not just for luxury cars, but even for luxury products. If you're talking of clothing, somebody wears on a shirt costing 50,000, and even new shirts could cost 50,000 rupees, but yes, they do cost. But then how many shirts are you going to buy of this type? How many cars are you going to buy? So I think even for housing, If you remember, if you look at a newspaper and see what are the advertisements for housing, starting 8 crore onwards, starting 10 crore onwards, forget about the 1 crore. The builders are not going into 1 crore. They have other issues in terms of costs going up. Affordable housing is no longer sustainable from the point of view of the developer. But I think income inequality in the country, or I should say reducing income inequality, is essential to keep the luxury segment up. Because there are limits to which one can consume. Even if you're talking of things like dining, how many times am I going to go to a 5-star hotel, come to Trident and dine on my own account? If Fortune India is paying for it, I'll come. But if on my own, if I have to pay for it, I'll say, okay, once a month, once in 2 months, I'm not going to come every day. Unless we have the category of people, I think. In fact, I wouldn't like to take too much of time, but we've also seen something in terms of experience consumption. You know, last year when Coldplay came, tickets sold off in no time. I wanted to book tickets after half an hour, everything sold off. Today, when we are talking of this, who's it, Smashing Pumpkins coming in, tickets are available. Enrique, who was a rage in our time, today tickets are still available. Nobody wants to sell in black. People don't have the money.
Yeah. Angshuman, I know you have a strong view on it about the fatigue setting in the category, so in the luxury category.
I think, continuing from, what was commented, but with a slightly different perspective, I do believe that there is a level of fatigue, across categories in terms of ownership. And I'm saying more around ownership than consumption. That has set in because the top of the pyramid is, like you mentioned, constrained. And the rest of the pyramid, which is the middle part of the pyramid, is not coming up fast enough to be able to, take over the baton of consumption. But one very important point there is that, and that will be a perfect segue into the question on Gen Z and, the next generation and how they think about consuming. I think there's one thing called inflation and there's one thing called lifestyle inflation. Today, even if there is, let's say, a regular worker in a factory or, people with, I would say, a reasonable income, their kids and their aspirations, thanks to global availability of information, connectivity, etc., they aspire no less. So the Coldplay concert or a Travis Scott concert is a classic example of that they want to experience everything that's out there, which means that the burden on the parents to be able to cater to that lifestyle and lifestyle expectation is huge. And therefore, this extra money, whether it's going to be channelized as chocolate for chocolate or soap for soap, or whether it's going to get channelized towards fueling the expectations of the next generation, which is behaving and expecting things very differently under a very different value system, I think that's really where you would see much more of the spending getting channelized. And if you think about it, there is a overall inability to cater to that lifestyle inflation in the large part of the pyramid today, and any extra income, whether it's driven by events like GST or whether it's a sectoral up success, etc., which creates employment, etc., I think for a period of time is going to go into fueling this rather than become a very products consumption economy like Europe or the US, where people just consume and throw and buy more and more of personal care, beauty, etc. I think they'll contain that and move them towards some of these aspirational aspects so that there's a better feel-good factor to the way they are progressing in life.
You had spoken of consumer confidence improving. Now, how can consumer confidence improve when India INC is not giving regular increments, or giving 4%, 5%? We have certain sectors which are laying off staff. So I think income is a very important part. If my income is not increasing, see, if some companies are not giving the 10, 12% increments which people took for granted and it's come down to 4 to 5% or maybe nil, then automatically it's going to affect consumption of other goods, irrespective of the fact that my GST has come down. We should keep that also in mind.
Well, I'm sure. I think the challenge that we have is to generalize a country of 1.4 billion and give generalized themes. Things play differently, different sectors, different, I would say, levels of age groups and income groups, but valid point.
Yes, I was coming to.
If I just take a cue from all of you, I think in general, I'm very optimistic. So I'll remain to be optimistic because what is happening is, like you mentioned, the consumption story. So we have to be also innovative. What is changing also is that while, the historically our customer base was only rich, but we are also seeing a lot of new segments that are coming up. For an example, the IPOs. I believe in 2024 there were more than 250 IPOs that came into India. Close to about 19 to 20 billion US dollars worth of wealth was created. Also, the startup ecosystem that is coming by, new things, influencers who are coming by, they're making sometimes millions. These are new segment of customers who are also coming by. And to your point, you're right, salary increases in certain, let's say, legacy industries have been 4-5%. But right now, what is happening is also that, in my generation, I would want to stick to one company for 5 years, 10 years, 20 years, but that's not the case anymore. If I'm able to give 4% growth, my best of my employees are gone in 5 seconds. And this is what is happening. So the ecosystem is also providing these people who are getting only 4-5% of increment to move somewhere else, who is providing 20% growth. So I think there is AI is going to disrupt everything. So I think we're going to see a lot of disruption in the next 5-10 years, and we have to be agile and look for opportunities. And there is no dearth of opportunity. I think as Indians, we are not just hard power, we are soft powers. I believe, and all of us do believe tomorrow will be better than yesterday, today. So I think that will keep us also emotionally charged and continue to spend. That's my belief.
But Balbir,
On a light
Yeah.
note, I'm an economist, and economics is called a dismal science. So I would always tend to be a bit pessimist or cautious. Rather.
No worries. I think the combination that works.
No, but Balbir, jobs are going to be under stress now because of the macroeconomic conditions, the H-1B visa, the tariffs and all of that. So won't that impact consumption?
If you're asking me,
Yeah.
I think you also
the
see on the half
luxury end
glass full,
especially.
not half glass empty. I'm sure, at least for my industry, people who are coming back from US because of H-1B could be my potential buyers. They belong to that strata of income where there will be potential buyers. So I look at that said as a positive. But of course, I also believe that maybe a lot of business will move into India. So that will be a positive for India. It may be negative for, a lot of, you always say that US is, the hub of innovation. Now, if this happens, the hub of innovation will move back to India. Maybe if we, as a government, I'm sure a lot of stuff is being done on this topic. So if the innovation comes back to India, we also become innovation hubs going forward. So I think let's look at what is positive for us and then continue to work and flourish and give impetus to what is not there. If the government can support, private sector can support, I think we can benefit out of it. So for me, I look at what is coming out of it positively.
Alpana, I would like to hear from you on because the government is giving a lot of push for made in India brands and across categories. It's not just FMCG, but across categories. There's a lot of push for made in India brands. So do you see the made in India story picking up?
I think today, willy-nilly it is. I mean, with the kind of import costs which have gone up and the supply chain disruptions across the world that seem to be happening for various reasons, from tariffs to geopolitical reasons. Made in India is a strong story. Prime Minister keeps talking about Atmanirbharta. I have a startup. We started a very technology-heavy product. We don't have an ecosystem that supports it. We don't have an ecosystem that allows for R&D for smaller enterprises to get into this. But I'm with you. If that's where the world is going, and if there is indeed such a kind of an impetus to innovation, that would be fantastic. At this point, it doesn't exist. At this point, I also, I'm affiliated with a number of education institutions who are struggling for placements. Number of jobs are lower. The kind of jobs that are available to some of those graduates are significantly at a lower starting salary than 2 batches before and 3 batches before. So at this point, and then with the H-1Bs coming back, the number of jobs will anyway be under pressure. So I do think that we are going to have some kind of rough times ahead. But perhaps in the longer run, if all of these innovation impetus takes off and there's more that's happening from the government, we should be able to see a better times ahead.
So if I just made just one liner, I think we only see this H-1B topic to be that, there'll be job loss. But, all of these people who have been very, very successful, have been at the top ranked people in terms of their innovations, they could also be ones coming back and setting up their own ventures rather than looking for jobs. So they, rather than looking for a job, they could be job creators as well. Of course, it is easier said than done. I'm sitting at a distance and talking about it, but this could also be looked upon as something which is positive.
Angshuman, I would like to hear from you also. Would the job stress kind of have a negative impact on consumption?
So
despite the
it's an
GST?
evolving story. I don't think that the story is fully played out on the H-1B and its associated, overall US-India relationship. But whichever way it goes, I think if our technology and ITES, BPO industries get impacted, that is, at least for the next few years, a serious dent to employment opportunities. And if you just think about the story of India, I mean, manufacturing has still not caught up to where services is kind of tapering off now. And services has really, carried the baton in terms of employment of huge amounts of young people that have come from, STEM graduates and, college pass outs, etc. There's huge absorption of that, which has led to consumption, which has led to overall peace, the right environment. I think the stability of that piece is very important to. What happens in the long term, whether innovation will come back to India, etc., are all, thematics where a lot of forces are at play, including how the government is able to incentivize them and what's the environment, etc. But in the short term, I do see that, the stability of this sector, which employs so many people, is a very important component of how we look at consumption and the overall India story play out.
Any view?
See, the thing is that I'm quite sure the companies which have been hiring the people with this H-1B visa would look at alternatives to tide over this problem. You could be looking at other geographies, or you may be doing the same work sitting in India. So I don't really see a major threat as such for jobs, because finally, at the end of the day, what are we talking of? I think if I got the numbers right, 65,000 visas every year plus 20 for STEM. So out of this 85,000 visas, India apparently gets around 60 or 70% of them comes to India. So the overall numbers may not be difficult for one to absorb, given the fact that the economy is doing very well and poised to grow at a continued sustained pace of around 7%. I don't see a major threat from that. Maybe things like AI could be another issue, or in terms of the lower skill jobs, which is a totally different issue, because we have seen that we have a large demographic so-called dividend, which we call, but they're probably unemployable because they don't have the right skill sets. I think that's the one reason why the PM/FM have been harping on skill development. So that's a totally different issue where we need to get back to our education system and make sure people don't just get a degree which is worthless. You need to acquire certain skills so that you're able to fit into the overall ecosystem.
Angshuman, coming back to you, if we were to look at the entire consumption ecosystem, and especially with the larger companies, most of them kind of at the peak of inflation, they launch their own D2C brands. So there's D2C, then there is your mass brands, then there's the entire premiumization strategy. Now with GST rates being slashed, do you see a change in strategy?
For the companies?
Yeah.
And I think that, look, these are different ways of reaching consumers. So let's look at it in two ways. One is the emergence of D2C brands. And we all know that there's been a democratization of brands because it was hard to build brands in India thanks to the distribution paradigm that we have. And it's very expensive and not too many people have the money, both in terms of demand generation, marketing costs involved, as well as the costs of building distribution. So it's a bit of a chicken and egg that somebody has to break into. Quick commerce, e-commerce, all of them have given that platform for more brands to sort of be offered. That's also led to, the prior period led to complacency on the part of some of the large companies in terms of innovation or moving with where the consumer preferences are. But I think there's a very interesting line that I picked up, which says that the thing between an incumbent and a startup is that the startup must get distribution before the incumbent gets innovation. But what I see is that the incumbent is really building on innovation much faster than the startup is able to build distribution, because, there's a very different skill set there. So overall, I think product meritocracy will win eventually. channel or a channel kind of strengths or distribution strengths and all have allowed companies to rule over decades. I think that's converting now to a product and a brand-led meritocracy, and that's already started happening. With that, obviously, it's not enough to be a D2C company or a large multinational. The point is, what do you have as a product to the consumer? I think that's where it's heading, and it's already happened. I mean, there's a pretty much evening out of the growths or disproportionate growths that D2C companies were seeing, and similarly there's a kind of a penetration that large companies are also had achieved. 20 to 24 there was huge growth, and now it's all kind of normalizing out, although quick commerce is really playing a great role in terms of even formalizing the economy, because a lot of categories that I work with in packaged foods, which earlier used to be very unbranded, you'll have some sweet shop selling stuff. The moment the consumption habit comes on quick commerce, you're eventually inevitably buying branded. So there's a formalization happening through those also, and multiple other changes also at play along with all of this. So I think it's a very interesting environment of quite a few factors: supply chains, make in India, digital channels, new age consumer, completely disruptive sort of product models, AI. I think it's all coming together. Hard to predict what the Y is equal to FX is going to be, but I think it's happening in the best benefit of the consumer.
Alpana, it'll be interesting to hear from you. What do you expect?
So, we're still talking about sliver of the market. The e-commerce, I think I've been hearing it for the last 15 years, how it's going to grow and gallop, and how large parts of India are digitally already connected and they're going to be buying online. We're still looking at 8% of the entire retail business, which tends to be e-commerce. And of that, if you really take out marketplaces, which is the majority of it, you're left with 2 to 3% as D2C brands. They are learning that omnichannel is the way to go, but again, it's a very, very small number. So few categories where there are some Instagrammable brands and there are some brands that have been built digitally, but a majority of D2C brands are struggling. The business model doesn't really work. But you're right. I think this line that distribution versus innovation of incumbents, I think a lot of incumbents are still asleep and they're not really pushing innovation as far ahead. Some of the larger companies that I'm, very close with say that, they're so used to big numbers that when you start a small brand, the kind of numbers it'll get you, it doesn't seem meaningful at all. And therefore, that foray towards innovative products is just curtailed because they're used to much larger numbers. And that's where they're losing out. But I think, right now it's in a flux. We don't know which way it'll go and how far D2C can grow much faster. We need definitely a more accessible ecosystem for startups to be able to make D2C happen more profitably, which is currently not happening. ONDC, the greatly touted platform, not really gone anywhere. So I think at this point, not much has changed. Few categories, few brands might have got the benefit of it, but not much has changed.
So do you expect a consolidation in the D2C brands?
I don't believe they're large enough right now to even warrant that. When you start talking about a significant number of D2C brands in every category, then it is large enough to warrant the idea of consolidation. Now, individual brands will get acquired and so on, but it's not a movement as such in the country.
So, my next question is also to you.
If I just
Sure, please.
that, I think I'm a big believer in the quick commerce story. Maybe some of the categories that you're reflecting on while you're saying. I mean, I've seen companies in frozen foods, for example, right? I mean, long shelf life products never having the right taste, right, profile, because India doesn't have a cold chain. I'm just working for a company which used to be in 10 cities, and now they still are at 10 cities in terms of physical distribution. They've got about 10 more cities that they cover through distributors. They've got 110 cities that they built to now thanks to quick commerce, and Swiggy has reached 180 cities. So, some of these, I would say, distribution intense, infrastructure intense, I would say businesses, frozen, chilled products, fresh products in food. are finding inroads thanks to the investments, combined infrastructure investments that some of these platforms are able to make. It's a different matter. We can talk about the burn and all of that, and there are some thoughts around that. But the fact is that a company which was serving 12 cities is now serving 180 cities. So and that's also not only about a brand, but a category. Today, frozen is growing in quick commerce at 65%, 70%. Otherwise, there's no way on earth you can, in a general trade setup, build that kind of stuff. So I think we'll have to obviously differentiate between categories that are penetrated and therefore what e-com and quick com are doing to it, versus the ones that have not seen the legs of penetration and growth, which are getting a big momentum.
Well, there will always be individual brands. I think it's the larger ecosystem. In fact, the other thing that's helping is, I think, the growth of the franchisee business.
Yeah.
That's rolling out a lot of brands much faster and so on. So there is obviously some
Luggage, durables.
So
If you look at China and Korea, something like luggage is 85 to 90% e-commerce now. India is also moving fast in that direction. So I think there's some of those categories which we all believed at one point in time needs touch and feel, and furniture. How are we ever going to buy a sofa without seeing it, or a TV without seeing it? Significant proportions have moved towards e-commerce and quick commerce.
So which are the categories you think D2C has an edge, and which are the categories you think they do not have an edge?
So, things like luggage, things like mattresses, things like furniture, very high volume products. And the economics of it is that if it's including helmets, so they're high volume, shipping costs are very high, returns have to be allowed, and there are very high level of returns. Marketplace returns can be as high as 30%, 40%. So the economics of it right now is that all the brands believe that there is a model out there where they will eventually make money. But I'm not sure who's making money, because the marketplaces are not making money. The quick commerce companies are not making money. The brands themselves are not making money. So at this point, it seems like a pie in the sky that I think a lot of D2C brands are chasing. And therefore, finding more, and finding more models. I think easy capital is drying up, where a path to profit is not visible. So I think keeping that in mind, the newer models that will emerge will be categories which can be sustained on e-commerce, where shipping costs, a lot of the costs are more manageable. There is a margin, there is a path to profit that you can see very clearly. It's not just enough to have consumption or revenue or the
I agree with Alpana.
GMV.
One very important aspect, that we've had a very inefficient retailing system, right? A kirana store or a small store, or even somebody wanting to open a 3,000 square foot store, the real estate challenges that are there. I remember, one of the retail tycoons had once told me that the biggest challenge is how much working capital does a small retailer have, how much space does it have, and how does it do justice to the proliferation of categories and brands that has happened. So what e-commerce is providing is a place to choose and get much more option. So from that perspective, what a physical store is able to offer versus what a e-com, I'm saying more e-com, Q-com is limited to the top 3 brands and convenience. But e-com is able to provide. I think the BPC story has played out in that manner, because if you go to an outlet, a chemist outlet, you'll have 1 or 2 brands of what you want to buy, but a Nykaa is providing the whole plethora of choices out there. So I think that's one more aspect that could be, a criteria to look at what would succeed on e-com or Q-com.
Yes,
And
please.
very, very small thing. I mean, what we're also seeing is that not only for, let's say now broadly in automotive segment, that we are limited to category A, B, C towns. We're also seeing a lot of demand coming through MSMEs, the small industries that are around a bigger city. So, that we are developing, let's say 25, 30 kilometers of highway per day basis. Whatever said and done, all of us feel this on a day-to-day basis when we travel out of Mumbai, Delhi or bigger city, that we have highways. So we also have these small towns that are coming by, and they're also generating demand. So, I think the horizontal spread of the country is also becoming larger. And like I was mentioning, from urbanization from 35% to 50% in the next 10 years will also help us grow this whole segment. I'm right now talking of automotive, but I think I can also relate to what you're talking about, that, as we have broad base, consumption happening in one city or a bigger city, but you will also have these small towns around where the consumption will help us grow. Number one. Number two, I think like you were mentioning, I think in general we have to, I'm just extending my discussion, going towards your side. What is your expertise? But please correct me if I'm wrong. We are also a country where we will probably be a low profit, high volume kind of a business where our wealth creation happens when you have investments coming in, when you go for an IPO. This is also something which is very probably unique. We need to become voluminous enough that we maybe work on a low profits in the beginning and then eventually go for an IPO, create a wealth and then spread our wings. So I think this is also something which I believe should in general help the economy and help the businesses to grow.
So is the percentage of demand for Audi increasing from the tier 2, tier 3
Absolutely.
markets?
Like I said,
Okay.
tier 2, tier 3 cities and MSMEs. I mean, this is a direct link to consumers who have set up their small units in and around bigger cities, and then the consumption is growing from there.
Great.
Just to get into the e-commerce thing, I think you had mentioned saying that most of them are not profitable, which is a fact. So we have seen that. Is it a case of these people running the enterprises where you're just burning money to make sure that your top line keeps growing? I think that's the major concern which is there. And if I add it to the IPO, which you had spoken of being a boom, see, lots of people have lost money because people have just run in a frenzy. A lot of these e-commerce companies, I don't want to mention names. I mean, everybody knew they were going to flop. And then finally they list at the lower price. People have lost a lot of money. But I'm not quite sure. I think given the logistics costs, as you have mentioned, it's very, very correct that this e-commerce, it sounds very nice. Now, let me just give you an example. One of these delivery companies, one of these e-commerce companies, I asked the guy in the lift as to how much money is he being paid per order. Today, he's being paid 25 rupees per order. Prior to COVID, he was paid 45 rupees per order. So maybe you're trying to make your money by squeezing your whatever these delivery boys are called. So I think these models, may not financially be, I don't know how financially profitable they'll be. I'm not, of course, in this business, so I really wouldn't know. But this is just an observation which I thought
I think there are. I've done some work and been close to numbers. The existing see, if you're in such a rapid growth trajectory, whether it's Unilever or a P&G, when they've taken Coca-Cola has taken more than a decade to break even in India. It's just that it's under a much larger umbrella and it's not visible. But when a promoter does it, it's all visible with private money because there's so many transactions getting announced. And therefore, you see all these numbers. But the fact is that it takes time to build assets, whether it's brand, whether it's distribution, whether it's people capabilities. And you've got to go through the underutilization curve. If I just reflect on some of the companies, Zomato, of course, is a great example. Nykaa is a great example of something that I'm sure in their early days, somebody said that will they ever make money? But they did. The point is that their existing cohorts, the mature markets that they operate in, make money. The rate at which they're expanding infrastructure, if they shut the tap down, they'll make money. But the point is that you're building for the future. You're building. And, quick commerce, right? For example, 10 minutes. Yes, it's a very audacious sort of statement to make. But if you make the 10 minute equal to 30 minute, the same guy is doing 3x the number of orders and everything works because it's eventually the rider productivity and the customer acquisition cost that's making them bleed. The rider productivity can go up 3 times if your 10 minutes becomes 30 minutes. And the same has been done by Amazons of the world, which used to do one-day delivery, and now they've moved to a more relaxed delivery regime. So I think it's a discovery of a business model. What is great as an asset is that the consumer is seeing great value in it and moving over. Retailing in India was inefficient. Modern trade never took off. It's a hop, skip, jump from general trade into a more formalized model, which gives you a lot of option and convenience. There will be a burn, which is the case in any branded business that's built out. Now, earlier days, people used to put factories, put it in the balance sheet, but show a P&L profit. Today, that investment is not in the balance sheet, but it's in the P&L, so you're calling it a loss. But the return on capital that you used to get on your capacity invested, you never called it as a loss or, look down on it. So I think it's a little bit of a changing lens on how do we look at businesses.
What's been your experience about how this works in other countries? Because I always feel when you say 10-minute delivery, I'm able to order a 30 rupee pack of half-liter milk, but I pay 5 rupees, 10 rupees extra. At some point of time, if I'm a rational person, I'll say, why the hell am I paying so much for a 10-minute delivery? I could have been happy in half an hour or 1 hour or maybe walked across to the Kirana shop. So all the GST gains which we're talking of, we're actually losing in terms of health.
Sorry, if
How
you
does
ask
it
me
work?
that question,
Yeah.
I mean, one is labor is cheap in India, so this works. Two is retail, traffic, all of that are very inefficient. So, I think the whole proposition, therefore, is much stronger. And also, retailing is inefficient. Half the products are not available, right? Quick commerce is giving you access to a lot of things. Fourth is hours of retailing. I mean, people are ordering things at 1 o'clock, 2 o'clock at night. I mean, sorry, this is more informal conversation, but in our
You
offices,
actually require that one.
in our offices, if there is a mouse or a team member working at 12 o'clock at night and, the laptop cord is not working or not found, you're getting it in 10 minutes. So there is a demand, at least, I would say many more hours around the clock. And it's, an aggregation of not only consumer products, but you're getting cables, you're getting mice. So I think that's what it's answering for. But
So there are a lot of models coming in. You have the quick commerce model, you have the hyperlocal model also, which is picking up. So do you see hyperlocal, making it big in, especially in tier 2, tier 3 India, or you see quick commerce getting into those markets?
Sure, would you just explain what you mean by the hyperlocal model?
Hyperlocal is like, you're nearby, you tie up with all your nearby grocery stores and
See, it's an
which was
it's an
Grofers, I mean,
omni-channel model.
Blinkit did it early.
If you look at a lot of evolved companies now, they're not looking at channel-wise growth at all. They're not saying, what's my modern trade growth, what's my general trade growth, because that's a very sad picture in any case. Most of it is degrowing. They're looking at city-level growth. So the orientation shift that's happening is, here's my customer, here's my product, there are multiple ways of reaching it. And if the total of that is growing, I'm okay. And there'll be more models that will come in certain areas. You'd see that quick commerce is not fully developed, some other model will work. But the eventual thing is that the consumer has to find the product when he needs it. I think that's where it's heading. And actually, MISs are getting tweaked by some companies to say, we won't monitor by channel. We will monitor by catchment, pin code, area, city, state. That's how we're going to look at the total sales, because as long as we're doing well there, we're not like penalizing one for the other and continuously worrying about things that are anyhow shifting in a certain direction.
So we are coming towards the end of the conversation, and Alpana, I would like to hear from you. Disruptions have become a way of life. There's either geopolitical disruptions or disruptions like tariff or climate, which is becoming a huge disruptor of late. So what really should be, what kind of a mindset change do organizations need to bring in order to build a business that would actually last the long?
So ever since the Industrial Revolution, we management and organizations have been product centric. So you make a product and then you figure out who's the consumer, how do you position it, how do you sell it, and so on. And your supply chains are built around that, as is your distribution. I think in a world that is disrupting, the only thing you have in constant is the consumer. And if you build a consumer centric business, so I'll tell you the difference fundamentally. If you look at a dairy business, okay, you will have it's traditionally built on a supply chain. So if you have ice creams, for example, you'll have a different channel for ice creams because you need a frozen for distribution and the way it's sort of transported. What is chilled or what is shelf stable has a completely different way. Right? But if you're looking at a consumer, the consumer is either looking for indulgence or is looking for health. Now, if you can deliver, a mother has the biggest fight she has every day is to get that child to drink that glass of milk. Now, if you can deliver that amount of health in an ice cream, you have won every battle, you have won the market share. But that is because if you can only get there if you become customer centric, if you remain product centric, you will continue doing things the same way. And I feel that agility will come from that. If we start becoming more human centric, we start becoming more consumer centric in the way we think businesses, I think it will fundamentally shift. I will give you an example. When I was with Tanishq, we used to same thing. We used to have the supply chain built on, we would source diamonds from one place, colored stones from another place, and gold from another, and so on. And so those karigars were different, the costing was different. So our stores were, we would have a gold section, we would have a colored stone section, we would have a diamonds section. But I realized that consumers were actually buying by price point. They came with a budget saying, 3 lakh mein kuch lena hai. They've not decided they will only buy this, they will not buy the other. They will, for weddings, they'll have another price point. And so we started piloting this where we created stores levels by price point, where you had mixed jewelry, and it made a huge difference, a huge impact, because suddenly your higher margin products got seen by people who were traditionally buying a different price point. So yeah, customer centric.
Thank you so much for this wonderful, insightful conversation. So, will GST increase step up consumption? Yes, it will, but there are a lot of caveats. Thank you so much.